Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. This the verse, and we're heavy glowing till we burst. I'm the one and only flow until I'm rolling in a hearse. And I'm not just spitting words, yo, I do this thing for work. And I've been dreaming of a way to believe in all the pieces, chasing prequels in my mental, have me doubting up the sequence. Yeah, there was always demons, but we never used to feed them. And now we're gonna beat them with our money, making freedom. No respecting for the evil, you can send it to the boondock. I learned from Harry Sudock while jamming on some Tupac. Bitcoin is a movement and we're going to the moon, man. Bitcoin is the future and it's coming kinda soon, fam. Praise Satoshi, but this isn't a theocracy. And I'm offensive to the purpose of government bureaucracy. And ain't nobody stopping me when I did some fallacies, man. 2023's the year of Galaxy Brains. Let's go. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. Harry Sudock, Chief Strategy Officer at GRIID, a Bitcoin mining company, is our guest. We'll talk with Harry a lot about energy markets, electricity generation, Bitcoin mining, and Bitcoin Park in Nashville, where Harry is also a partner. And of course, we'll check in with our good friend Bimnet, a BB from Galaxy Trading, as always, to talk markets and macro. But before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast represents investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Dude, we're busting out another one of these old beats. This one's from 2011, okay? So it's a 13-year-old beat, and I'm finally rapping on it. I love this one, and the rest of this episode is great. You're going to love it, so let's get started. Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, great to see you.
Thanks for having me.
What's been happening in markets? I guess the big news since, I guess it happened after we recorded last week, was this ruling in the Ripple case. I think that's
Correct. Probably
the big news still in the cryptocurrency markets. What's been the fallout from that you've seen?
Well, the biggest fallout was Ripple.
XRP went up a lot.
It has rallied tremendously up to around 75 cents right now.
Wow.
And I mean, shorts got hosed. Like tons of like losses. Are implied.
This is like
there.
all primarily like offshore trading, right? At this point, because all the
Correct.
U.S. entities delisted it.
Correct.
Yeah.
In addition to Ripple, obviously Stellar Lumens also had a.
Why? Because it has an X in it, XLM.
No, it's the same guy, right?
Oh, I guess, but
yeah.
I mean that's like, God, when you look at these markets, you're like,
Short
that's
squeeze.
funny.
Yes,
Yeah.
but
XLM.
Lumens are like at 14 cents now and looking like they can go higher.
It's crazy.
It's a function of just liquidity and like there are forced buyers in a market and not that many sellers.
Yeah.
And the other thing to think about is, there has been a ton of interest in the U.S. in Ripple. Right, and they haven't, and U.S.-based investors really haven't had the opportunity to buy it for years now.
Right, Coinbase immediately relisted it.
Relisted
like a couple hours after that ruling came out.
And let's be honest, it's a top 10 token.
Right.
Right. If you're benchmarked to performance, or you're trying to get exposure to the crypto space.
Yeah.
Right. Like you're almost. Some folks are like.
So indexes maybe had to buy.
People had. Yeah.
Second
absolutely.
it was relisted. Maybe had to buy. Wow, that's interesting. Yeah.
And it's been like, I won't take credit for this because I heard it from somebody else, but that was, one of the main reasons to be bullish. Ripple before this decision was nobody in the U.S. has had an opportunity to buy it.
So just the second, if it were to become available, then bam.
Yeah, bam.
So was it like liquid? Like, I mean,
it is liquid. It's one of the most liquid tokens on the planet.
So a bunch of liquidity just like flowed back to the States as soon as that happened?
Ripple on the day, Ripple traded over $10 billion. Wow.
What was that, like last Thursday?
Thursday? Yeah.
Yeah. Wow.
Like that is, that's like Bitcoin on a bad day.
Yeah.
Like
that's crazy.
That's a crazy, all token. Most people don't even know what it does.
Yeah, I don't think it does much. That's just my opinion.
But that's not the point.
No, but so and then there was a broad rally that Thursday,
absolutely.
Right? Bitcoin made yearly highs. ETH was up even more, right?
ETH BTC started
all the other tokens named in various SEC filings and lawsuits as possibly securities, they all rallied.
Absolutely.
But are we still? Ripple is showing some strength, like still holding there, but most of the rest of the stuff has come back down, right? For the most part,
I would say so, with the exception of a couple of things. Like Solana has, I guess pre that announcement, most of the stuff has come off.
Yeah.
I think that's just indicative of just positioning going into that Ripple event, which was already crowded.
Yeah.
But high level, I do think this is a constructive development for the broader argument of what is a security and what isn't, and what can exchanges list and what they can't.
Yeah, it's tricky ruling. Like I always tell people,
you don't know what's going to happen on appeal. There's tons of variables.
Yeah,
there's going to be case by case defense, by the SEC.
Exactly.
Lots and lots of ways to think about it.
I think clearly the SEC was a loser in the decision, and Ripple, the exchanges, even just the cryptocurrency complex was, I would say, at least a decent winner. I mean, I think Ripple a pretty big winner.
I mean,
but,
I think,
but there's still a lot of nuance there.
Still a lot of nuance.
Yeah,
absolutely. I think the way you're going to keep score of, who's winning and on time, one, Ripple price, two, like things like Brian Armstrong getting invited to speak to
a bunch of Democratic
congressmen.
Yeah.
Right. It's going to be whether or not an ETF gets approved, how quickly, etc., and how the narrative changes around the SEC's approach to crypto, etc. It's the soft points.
Yeah.
Seem like they're going to be pretty huge right now, and we live in a very political and sort of image-oriented world, and as you get closer to the election, right? Like if it becomes more apparent that the better story, better narrative is not the one the SEC is pursuing, but
something
else.
Yeah.
I think that will bring better outcomes, better legislation. And it'll be good for crypto.
That is interesting. And when I think about the election today, there was just news Robert F. Kennedy Jr. had a pretty interesting plan he announced.
Oh, Bitcoin-backed dollar?
It's not just Bitcoin, but it's gold, silver, platinum.
Hard asset.
Yeah, he has a plan, should he become elected, to basically starting with new treasury issuance to back those issuances with hard assets, some of them, or a percentage, I think starting at a smaller percentage and then growing as part of a sound money plan. That was kind of interesting. There's going to be a lot of I think he clearly thinks that there is voters there, and there are. We know there's, at least 20 million, owners of Bitcoin in the U.S. That's what the White House said.
That's not the angle I would pursue if I was him personally.
I don't know if I would or wouldn't.
No, it's just like there's reasons why we're not on the gold standard. The arguments are pretty clear as to why you wouldn't. Same things with silver, platinum, other things of that nature. Bitcoin. Well, I'm not gonna throw out the Bitcoin one just now, but I think what you're supposed to push for is just democratization of this asset class.
Of access.
Yeah, of access.
Yeah.
Like, I shouldn't have to pay ridiculous bid offer every time that I want to PA buy like $200 worth of Bitcoin.
I mean,
should be able to do
now,
it out of my retirement account, my tax advantaged accounts, wherever it may be.
In most like retail platforms that I've used, if I buy $100 of Bitcoin, I'm getting like $97 worth of it.
It's egregious.
It's 3% fee. It's insane.
That's
pretty common. Like that fee is pretty common.
Yeah, and like all we're asking for is just a product offering that's consistent with the technology and with the efficiency of scale that's available for every other product.
And this is kind of what Larry Fink said on Fox Business.
And he's dead right.
Yeah.
Like
he said that
if there are 20 million crypto holders in the U.S., like the government by not allowing them, it's just charging them money unfairly. You're forcing people into an awful product like the Bito futures that have poor tracking error.
I know, with the roll.
You're approving double levered ETFs so that retail can get hosed.
Yeah.
Trading this stuff it's just so antithetical to the ethos of what the SEC is supposed to be.
Yeah, and I think this is what BlackRock must be seeing. It feels like the narrative is shifting on that ETF a lot.
Yeah, it's
you even look and they were saying things like, all the prior filings had a surveillance sharing agreement that looked at the futures markets. And they were like, oh, no, it needs to look at the spot market. And it's like, but the Spider Gold ETF, or Gold Trust or whatever, the GLD, it surveils it is a commodity-backed spot ETF that surveils the futures market. So there's plenty of precedent, and you know why? Because there is no centralized spot market for Bitcoin. There is no centralized spot market for gold. You can Bitcoin's totally global. What are you can't monitor the spot market. It's not an ISI. It's not like an equity that trades in one stock exchange, right? So that's why so even that like starts to seem wild. Like they're like they should like the commodity doing surveillance sharing agreement and monitoring the futures market is sufficient for other assets, other commodities. Why not Bitcoin? Right. Anyway, they've all gone around this by naming Coinbase as their spot market. But I agree. It feels like there's a dam has to break on that. Let's go back though. Let's talk about some of the other macro stuff that's happening. Anything interesting since we last talked? I mean, not a big data week, right?
Well, so last night, not in the U.S. at least. The U.S. data has been, besides folks had the inflation reading, last week, and that's kind of the big one.
Yeah.
But we had UK inflation come out last night. Came in slightly softer than expected. Came in at 6.9 versus 7.1.
Theirs has been worse than
it's been
ours
bad,
in general, right?
But generally, it kind of what it seems like is that headline inflation has peaked and stuff is like slowly trending lower. But there remain upside risks.
Yeah.
Right. And those upside risks, some of them are structural, like in the U.S. with people locked into mortgages, and so housing supply staying tight. And some of the other constraints are a little different, technical, like financial conditions, like all this other stuff. But the one thing I definitely need to mention though is oil. Oil has picked up a lot recently. So we've gone from, at the depths like 65 a barrel to like almost 76, 77 in WTI crude, and Brent's a bit higher. But a big reason why headline inflation came down everywhere is because oil prices came down everywhere.
Oh, I see.
Right? And so if you're going to start to see oil prices tick up, there's a risk that inflation like accelerates a little bit, at least the stuff that's sensitive to energy prices.
Yeah.
So that's one risk that's constantly on my mind, and I'm looking at those crude charts pretty closely. But outside of that, it does seem like you're having a little bit of synchronized global like inflation cool down. Knock on wood, because I know that's what central bankers would want to do right now.
Yeah.
But realistically, they're stuck between a rock and a hard place. And if I'm the Fed, I am going to stay as hawkish as possible. I see the NASDAQ up 40%. I see home prices still ticking high. I see.
Was that 40% year to date, the NASDAQ?
Yeah.
That's unbelievable. I know that we've been having, one of the best years in equities.
Make your jaw drop.
It is. That's absolutely wild. That can't be something the Fed wants to see theoretically,
Absolutely
right?
not.
That's like, people don't feel.
Who's gonna feel poor when their entire retirement account is up?
Just mooning. 40% year to date. My God.
Year to date.
Oh my God. I didn't realize it was so big. The other ones that have, and then big tech stocks have been doing great.
The big seven.
They're
unstoppable.
It's bizarre.
We're at new all-time highs in a bunch of the big tech names.
It's crazy.
All-time highs.
That's crazy.
Not like local
not,
trend
like cycle, not year to date. Yeah. Wow.
Ever. And so and then home prices haven't come off, right? So where is people wealth? Equity market, housing market.
Yep. And that's
people are going to feel poor when this stuff is rallying.
So if their biggest assets are valuable, then they go out and spend their cash. Then that's part
of
fear,
it. But
right?
Again, a lot of people don't have as much wealth, and so what you're focused on is everyone. And there are some things like student loan repayments that are going to happen starting in
We've
October.
talked about this, yeah.
So it's going to be a tale of two cities of sorts. But at the end of the day, like if you want to tackle inflation, like you can't have asset markets ripping.
It's not.
At least it's not supportive.
Yeah.
And I think what the Fed is thinking is like, well, monetary policy works with a lag. We're slowly draining liquidity from the market via QT. There's also more deficit spending happening, et cetera. So, I think they're probably taking the more measured approach, which is, in 6 months from now, we'll have drained $600 billion of liquidity. Where are stocks going to be then, and where's the housing market going to be then?
And we'll reevaluate over that period, right? We'll watch it closely.
But in the meantime, people are FOMOing into stocks.
That's great.
Meme names are popping off.
Really? For real?
Yeah, there was one that was up 40% today.
Oh my God. No.
And the guys were like, why is it up even?
Wasn't up at all.
Exactly.
Goodness gracious.
So, it's not like, as bad as it was in Doge to dollar era.
Right.
When
That was the good dog money times.
Good dog.
That was fun. That was fun. Dog money.
I mean, Elon pumped Doge today by 4% with a dog photo.
He posted his dog. Was it his dog or just
I
any
forgot
dog?
what it was. But I saw that headline. Doge up 4% on Elon tweet. I'm like, not again.
You're like this world. Oh man.
But he didn't even talk about Doge.
He's just a picture of a dog. Yeah.
That's the world we're in.
Oh my
now.
God! What a weird market and an interesting market to follow.
No, it's super fun.
All right, well, BIMNet, our friend BIMNet Abibi from Galaxy Trading, as always. Thank you so much.
Awesome. Have a good one.
Let's go now to our guest, Harry Sudock, Chief Strategy Officer and first employee at GRIID, a Bitcoin mining company. Harry, great to have you on.
Alex, it's always good to see you, my brother.
I know. I'm so happy to have you. We've been friends for a while now. I think we first met on Clubhouse, and I say this a lot. I think we did.
We met once before that.
Okay.
Which was at the Fidelity Mining Summit.
Yes, yes. Gosh,
And it was
like,
chaos.
Was that like 2018 or 19?
19.
Well, man, that seems like that was 5 years ago. Oh my God.
It was actually a long time ago.
Wow. Well, I'm super happy to have Harry here. Now, Harry's also a partner at Bitcoin Park.
Yes, sir.
Which is, we're going to get into that. One of my favorite places. Was just there last week in Nashville. And we'll talk about what that is too. But so we're going to get into Bitcoin Park. But let's start it off. Tell us what GRIID does and what you do.
Sure. So GRIID is a vertically integrated industrial scale Bitcoin mining company. We've got 4 sites, 3 in Tennessee, 1 in New York. We're in the midst of a SPAC transaction, so I am in our quiet period, so I've got to be pubco diligent in my comments. But, basically we do self-mining. We're kind of a execution first, heads down type of operation. We got into mining founded the company in 2018 when, believe it or not, Bitcoin mining was unbelievably not sexy. Mm-hmm. It's gotten significantly sexier since then. But we've always kind of just had the perspective that there's only a few great businesses in our industry. Yeah. And so we picked a vertical and went super deep. The worst, our CEO, Trey Kelly, says this all the time, but he said the worst thing you can be is an entrepreneur looking for an idea. Yeah. And so, we spent a long time just thinking about what made sense, in a world of insane business ideas, what was a sane one. And he'd spent time in the cybersecurity space at OpenDNS, which was then acquired by Cisco. Yep. I'd spent time at a fintech that was then acquired by the CME. So we'd both been down this, I don't know, I don't want to say VC hamster wheel, but VC hamster wheel of raise money, build product, hope it doesn't run out, raise more money, hope it doesn't run out, find someone to buy you. Right. And so rather than kind of go that way again, which, look, there's a lot of incredible companies that came out of that process. So, it's not a knock, but, we wanted to kind of return to the fundamental laws of business physics of generate revenue, have less costs than your revenue, net profit at the end.
You can do that?
Yeah, allegedly. And so what's awesome is that we get to do that style of business, but generating Bitcoin-denominated revenues and therefore Bitcoin-denominated cash flows, which is an opportunity to kind of have a sane business model, but with this huge tailwind of an emerging asset and an emerging ecosystem around this new thing. And so you get these huge outsized returns, but you're able to do so on the back of a fundamentally sound business.
Fascinating. And we were talking about this before we started recording, and you mentioned it, you sort of alluded to it, but the business models in Bitcoin have historically, what did you say before? The 3 sort of business models that have been viable at scale.
Yeah. So I think there's a lot that's sort of still in the earliest stage that may reveal tons of new stuff that we haven't seen yet. So caveat with that, but really there's exchange businesses that have thrived at scale. There are mining businesses which thrive at scale. And then I think there's this third category that's emerging, which is, something fintech adjacent. But folks like Unchained, folks like Strike, folks like what I think Fedi could be, we see these, or at least I see these, as a third category that's emerging at scale. And it's going to be this financial services layer that is not trading currency A for currency B. It's really sort of the service layer or the payment rail. And then that can kind of flow into what Fedi's doing, which is really more of this almost like you get sort of the attributes of Bitcoin and the privacy of eCash, but within a software layer.
Yeah, it's bespoke custody forms and like a team building or like team management you could do. You could imagine frankly, you could imagine like a DAO that's built on something what Fedi's building, right? Like it's essentially like complex multi-sig arrangements that allow you to issue private monies or pay people.
Exactly. We see this also with like the folks, Rob Hamilton and Becca at Anchorwatch.
Yeah.
Like they're building something that I think could be a huge business, which is like the InsurTech built on top of Bitcoin native wallet software. So
right.
these financial service kind of third road, non-exchange, non-mining businesses, I think there's a couple of them that are hitting scale, and there are a couple of them that are kind of pre-scale. But there's this third leg that's emerged more recently, which is really cool to see.
Yeah. So on Bitcoin mining, I was reading earlier, maybe yesterday. Today's Wednesday, July 18th.
Mm-hmm.
I was reading yesterday that there's this new academic paper out of MIT with some very famous, apparently, famous climate scientists. And in this paper, they are quite constructive on Bitcoin mining. I think it's very fair to say that. In the abstract alone, which is all I've read so far, they said that this it just came out yesterday, but I'm going to get there. By the time you hear this, I'll have read the entire thing, and actually I'm planning on writing about it in our newsletter this week. So by the time this podcast is live, you should be able to read my much more comprehensive thoughts on this. But in the abstract, what they say is that the paper does validate some concerns that environmentalists have, but it also validates that Bitcoin mining can be extremely positive for the environment. Like when we used to talk a lot, you were sort of, I think, one of the most coherent and cogent voices on explaining how energy grids work, electrical grids work, what value Bitcoin can add to them. What are your thoughts? I mean, can't be surprised that some smart people have finally figured this out.
Yeah, I think that the misconception around Bitcoin mining and energy and electricity and what does all this mean? It comes down to just like we don't have a super sophisticated population that knows how their light switch works, and that's a problem. So in any sort of theoretical electric system, there's three role players. There's the generation, which is a turbine that spins, right? Whether you burn gas or coal or oil to do that, or you use the steam that comes off the heating from a nuclear environment with zero emission, doesn't matter, right? It's a big magnet that spins. Mm-hmm. Then there's transmission. So the way that you move energy is different. You have to jump it up to this incredibly high voltage to be able to move it over a long distance. That distance decays after about 500 miles. And so you need to be, reasonably in proximity, but not next to. And then the third layer, or the third role player, is delivery. So then you've got to drop it down from that extremely high, high-speed rail voltage to, maybe a small vehicle voltage where you get it into your house and then consume it. And I just think people don't really understand the engineering constraints that are associated with that system and the need for a dynamic consumer like a Bitcoin miner who is able to ramp up and ramp down. And so, when you think about what are the fundamental innovations that Bitcoin and its adjacent sort of emergent properties bring to markets, everybody I think is on the same page that proof of work plus the difficulty adjustment is the core innovation of Bitcoin that allows it to be a truly foundationally scarce internet money or digital money. That's why we have a hard cap. That's why the system functions, is those two attributes getting combined. But when you look at that proof of work piece, the way that a Bitcoin miner generates revenue is they've got a ton of servers that basically guess the next block. Mm-hmm. They spit out the guess, and then the pool and the network validates if that block is acceptable or not. Those are happening at the sub-second frequency.
Yeah.
So unlike, let's just use an aluminum smelter as an alternative, because if there's a great quote that I can't attribute accurately, but it's that Iceland's greatest export is electricity. They just do it with aluminum.
Yeah.
And so this idea of taking electricity, using a mechanical process to turn it into a commodity good, and then exporting that commodity good, that's a well-worn path.
Yeah.
Bitcoin miners just do it way better, because if I go melt a bunch of aluminum and I'm smelting, and the pot line is full of of a chemical process, I can't turn off the electricity because that's going to harden, and now I got to build a new pot line.
Yeah.
A Bitcoin miner is fundamentally different because it's all digital, and so I can stop the mining process at any time with no impact to the business, no impact to the hardware, or minimal impact to the hardware, and I'm able to give that electricity back. And so the role that a Bitcoin manufacturer, which is really what a miner is, we're manufacturing Bitcoin all day, we're able to stop our manufacturing process on an instant and meet the needs of the electricity environment that we're in, which, we don't do altruistically. And that's what's so great, is that now there's a market incentive and an emerging market of incentives in order to create this dynamic flexibility. So we can enter into a contract as a Bitcoin miner that has a bunch of curtailment requirements within it that unlocks the bottom of the barrel lower price that we're all looking for. And we're able to actually deliver on those contractual obligations within the electric system. And so, there's a few categories of why that matters. One of them is that, there's a big lag in between building the supply of electricity and mapping it to the demand. The demand can move pretty dynamically. Building more supply is very, very slow. Mm-hmm. And so there's a bunch of pockets all over the U.S. Marty Bent has a great thread about this, where there's a bunch of places that used to have a lot of manufacturing and therefore have a lot of grid infrastructure that just isn't utilized anymore because those manufacturing businesses either went somewhere else or failed. Mm-hmm. And so being able to bring a net new consumer that's not a net new burden into those systems generates a ton of revenue for places that would never have those revenues available to them. Oh, and by the way, a public utility has a bunch of households in it mm-hmm. that prices go up if you don't have customers who are like a Bitcoin miner. So, right. We had a great interaction with one of the CEOs of a utility that we have a mine at, and it was right when inflation was peaking. And he said, I basically have a couple of options. Option one is I can raise prices on everyone. Option two is I can degrade service. I can fix things more slowly or with lower quality. I can issue debt and basically burden the entire community, or I can find a customer like a Bitcoin miner.
Yeah, who will pay me for a bunch of extra electricity.
Exactly. Those are the only tools in the public utility playbook. And so when you think about the role that a Bitcoin miner has to play, Category 4 is really attractive for a lot of these folks.
Yeah, and you can't. We're talking about the idea that Bitcoin is a battery that has been promoted by a lot of people, and I think what they intend to mean is kind of like what you were saying about. They intend to say we're turning electricity into something portable and where value can be stored, and in that sense, it's battery-like. Mm-hmm. But let's talk about briefly how, I think both of us don't really like that construction because it's confusing. Also, it makes people think it's something it's not.
Correct.
But electricity has to be generated continuously. There is not a battery that can store the excess for when New York City needs it, right? They have to make it right now. Like the lights that are on us right now, I don't know how fast electricity literally moves through those giant transmission lines, but pretty fast.
Pretty fast.
This was probably generated within the last 5 minutes, right?
Relatively, yeah.
Or exactly. Or 30 minutes? I mean,
at most.
As long as it takes for electrical current to move across wires, basically.
Speed of light.
Yeah, basically. So this is happening right now. And so that reality causes every grid has to overproduce at all times.
In the U.S., we overproduce by about 14%.
At all times, on average.
Over the year.
Yeah. So annual
overproduction is about 14%.
That's actually better than I expected, to be honest.
The U.S. is really, really, really big.
Yeah.
14% is a ton of electricity. It's many Bitcoin networks over.
Yeah. So, and you have to, because if you produce exactly, like you said, the demand can change a lot. Literally, the simplest examples are bad weather, right? Really hot weather, everyone in New York turns on their air conditioner. All of a sudden, the demand on the grid is significantly higher than it was just the day before when it was 70 degrees. Now it's 95 degrees, tons more electricity.
Tons more.
So they have to be prepared for that. They have to be already producing it on the cool day.
Exactly.
So when the hot day happens, how does the Bitcoin miner help in that scenario?
Yeah, so I mean, to me, that is the absolute clearest natural experiment that we have. The whole electric system is designed around this concept of peaks.
Yeah.
So you have to design your production capabilities for that peak demand level. The reality is that we're not at peak demand the vast majority of the year.
Right.
And so some of the ways that you can try to design around that are, if you've ever heard of this concept of a peaker plant or combined cycle gas plant, that plant spins up when we see the peak coming. And thankfully, we live in a world with financialized derivatives for energy and electricity and commodities. And so you get signals early when that's happening. But the much more efficient and lower emission profile is, we should just have a ton of nuclear out there with Bitcoin miners oscillating up and down.
Yeah.
That's a far, far less harmful environment to be in.
Right.
Wind and solar are a little bit of a confusing option because, everybody can look outside and see that it's cloudy and knows that the solar panels are not generating as they would when it's sunny.
It's sort of like a nice to have because, sure, if it's sunny a lot, you can supplement your grid.
Totally.
But you really can't, if you're designing for peaks, you really can't rely on it. And there aren't sufficient batteries, right? So in an individual
batteries
home,
are a shitcoin.
I thought about getting solar on my house, right? I think at a small level, it can make a lot of sense because there actually are batteries big enough to store some of a house's amount of electricity.
Well, let's go back to
it's like a Tesla battery, like a car battery can store, but there isn't at grid size batteries.
And just think
By the way,
about
batteries also you have to mine for what is it?
cobalt,
and all these rare earths,
really
to
bad.
strip mine the earth to make them. So yeah.
But let's go back. The other piece of all of this is let's go back to the example of the three players. If let's say you replace the generation with a solar farm or a wind farm, now you have to interconnect that. How do you move the electricity from the new build into the system?
Yeah.
That's really easy when you swap a coal plant for a nuke. Infrastructure is already there. It's just a cutover. But if I go build a new wind turbine or a new solar farm at that scale, I need to now build new integration. There's a lot of engineering that has to go into that. There's if you look at the emission profile of an interconnection, it's very, very burdensome. So having to build and rebuild and add all of these transmission capabilities has this sort of hidden cost within the system design that is poorly accounted for today as well. So there's a lot of trade-offs in the system that only kind of emerge once you get into the weeds of it. The paper that you're referencing does a really good job of covering some of this. But I think that, the important distinction is also just that, yes, Bitcoin is a large purchaser of electricity.
Right.
The externalities of that electricity are not unique to Bitcoin. If we believe that we need to overhaul pieces of our electric system, let's overhaul them.
Yeah, we should.
That's great. And we can do so around cost, around reliability, and around environmental impact. That's not a Bitcoin story. That's an electric system story. Bitcoin miners are customers like everybody else, except they're special. Except you can design these incredibly low impact contracts around a customer like this, where you couldn't with an auto plant, or you couldn't with a hospital, or some of these other types of off-takers.
Right, hospital can't just turn off.
Yeah, exactly.
Oh, it's too hot. We need the electricity back. Shut off the man's breathing machine.
Yeah, grandma's going in for dialysis. We can't today. We don't have enough electrons.
Right.
That's not a thing.
But Bitcoin machines, an entire giant site can just turn off at a moment's notice, right?
Moment's notice.
I mean, and
sub 5 minutes.
And now there was on this story too, with the curtailment becoming so popular, especially in markets like Texas. There's software, right? Is it Foreman software?
The Foreman guys
these
are doing
guys make
it.
one. I think others are making them too.
A lot.
There's a lot of them.
A lot of folks have built them internally.
Custom software. So they can watch derivatives markets, or they see the data feeds from the grid itself, like from ERCOT, and they can have it automated to turn on and off.
Exactly.
So it's so much more efficient, such an efficient use of energy, or of electricity.
Correct.
Yeah.
This is what's so poorly understood. So there is truly a differentiated buyer in the form of Bitcoin miners that are going to make our electric system more reliable, lower cost for individuals, and the incentives for net new generation and stable generation.
Yeah.
Huge incentive
Game
now to be
changer.
building those. We say internally a lot, GRIID is building the business at the intersection of energy and money.
Yeah. It's fascinating.
That's the whole playbook.
It's fascinating, dude. And the Bitcoin mining industry has gotten so big in the U.S. in particular. Is that just why is that? Is that because of our electricity generation and some things like ERCOT's interesting power markets? Is it because capital formation or capital markets? Is it because of our property rights? Like, what would you say?
You hit the three. So those are the three. The reason I think the Bitcoin mining industry is thriving here is, number one, capital formation. Heavy capital intensive business. You got to spend a lot of money up front.
Yep.
In order to be able to spin up these kind of mega farms and mega sites. Number two, property rights are incredibly clear. We've got the balkanization across states. Some states are incredibly accommodating and proactive. Some states are not as accommodating and proactive. And so you've got this really healthy balkanization to attract businesses to the places where they're wanted. And then number three is that we have an incredible natural resource profile in the U.S. And we take it for granted, but we've got it on the defense side, which is we've got two huge oceans.
Yep.
We like those oceans. We've got two great neighbors in Canada and Mexico. And we have an incredibly fertile country that's able to generate electricity at massive scale.
Yeah. It's a match made in heaven. And I was happy to see that digital asset mining tax, the DAME, I forget what it actually stood for, but was struck from the negotiations over the debt ceiling increase. It also didn't actually make it into the budget proposal, so because that would just be like a top down. It would ruin the federalism that has created such a vibrant, pool of jurisdictions across this country.
And think about the precedent that it would set, right? We're sitting in a podcast studio. We don't like video producers.
Yeah.
We're going to tax all video producer profits.
Oh, look out, Phineas. Going to eat into your bottom line, dog.
In no other environment would you target one group of producers or customer bases.
Politicizing electricity is really a scary thought. It's wrong.
It's wrong.
It is wrong. I'm not going to say electricity is a human right, but it's damn well sure it's a requirement to live in a civilized society.
There's a great graph, which I'm sure you've seen and should post, in some of your analysis down the road, which is that there's along one axis, I believe there is GDP per capita.
Yes.
And along the other axis,
I've seen this.
There is
electricity consumption or generation.
Exactly.
One of them. Yeah.
It's electric generation per capita.
Literally, yes. And the history of civilization is a history of increasing electrical generation or energy generation. And we were mentioning nuclear. I mean, there was another great chart I saw was like I think they call it like the energy density. And so it's like wood is like the worst one. It's also the dirtiest. Also, because of their reliance on Russian natural gas and then attempts to get off of it, like I saw probably like 6 months or so ago, the UK was reduced to generating like 15 or 20% of all their electricity by burning wood, which, by the way, was being cut down in North Carolina and shipped there. And so it's like these guys are
notoriously low emission oil tankers.
Yeah, literally terrible environmental profile, all because they basically reject in a lot of Europe nuclear energy, and also have reliance on say like countries they eventually turn into enemies with. But this chart was like it's like wood, and it's like I forget the actual, but let's call it like 10. Like there's a number, there's a methodology for actually determining this energy density profile. And then it's like, and like gas is better, like, or oil is like a little better than gas is better than that. And then it's like, if you put nuclear on the chart, you can't see, you have to use log. You can't see the others at all. Like if wood's like 10 and like gas is 100, nuclear is like 32,000.
Yeah.
The density of uranium is in terms of the mass to electrical output is so dramatic. And of course, to your point, you don't burn the uranium. Right,
it just sits there.
It just sits there hot, basically, and
just heats the water,
and it heats the steam, and so there's no emissions at all. I mean, I just can't believe it. I guess it's like I can't believe this is one thing. We'll talk about Robert F. Kennedy Jr. for a minute because he's a famous anti-nuclear activist. It's one of the main policies of his that I don't like.
Yes.
I don't know where it came from. Were they afraid of the near meltdown at 3 Mile Island? It's weird because the environmental lobby specifically for the last 50 years has been very anti-nuclear. It's not just people that, and I think they preyed on, maybe you can tell me why that is, but also they preyed on the fears I think of people have of nuclear weapons and meltdowns, which are incredibly rare.
So I will tell you, this is a story direct from my mother, who is becoming one of the most based Bitcoiners I've ever met in a strange later in life turn of events.
Yeah.
Because she grew up a hippie. But I had to nuke pill her along the way. And she said, you don't understand, Harry. We grew up with duck and cover under our desks
Yeah.
because of nuclear bombs. You just don't get it.
You just don't like the word nuclear.
Literally,
terrible.
if you just called it isotope power instead of nuclear power,
Yeah.
we'd be fine.
Yeah.
But so there's a huge marketing problem and a huge brand problem for nuclear that I think is changing.
Yeah.
Pretty actively. Then the second piece is if you've ever read Nick Szabo's essay called Pascal's Scam.
I actually haven't read that one.
Okay.
I'll
So
check
are
that
you
out.
aware of Pascal's wager?
Yes.
Right? And for your audience, it's basically the idea of, the reason to be religious is that even if there's a 1% chance heaven and hell exists,
Right.
it's still worth it.
Should hedge.
Just hedge it out and be of the faith that gets you into heaven. So that's Pascal's wager.
Yeah.
Pascal's scam is Nick Szabo's building on that story, and his point is basically you can create a culture of fear around almost any issue so long as you make the catastrophic negative as big as you can.
Yeah.
So asteroids hitting the Earth, great example.
Yeah.
How much of our budget should we attribute to fighting asteroids in space?
I see like a Pascal's wagers amount.
Exactly. So he's like, great. So, if you now attribute that to everything
Yeah.
that has a catastrophic risk profile and take no account of the benefit side.
I see. So any slight risk at all, if it's big enough risk, just don't do it at all.
And so his point is that that's actually just a huge trap.
Right.
That ends up becoming a cage for us, where if you're constantly attending to these hugely far left tail risks with asymmetrically terrible outcomes, you actually end up in a terrible society.
Yeah.
And so I think nuclear has basically been a huge victim of a Pascal's scam, not a Pascal's wager, which is that the risk profile was overestimated, the size of the catastrophe was overestimated, and so we've ended up in this wrongly conservative viewpoint around the development of nuclear power. So we've introduced layer after layer after layer.
Bureaucracy's crazy.
Of bureaucratic, detritus, basically.
Yeah.
So when you and then it becomes a self-fulfilling prophecy, which is, it's too expensive to develop nuclear.
Right.
Right. It's not actually too expensive to develop the physical infrastructure around it. It's too expensive and too uncertain to try to go through the NRC review process. And so if we're able to cut down on that, standardize, normalize, kind of get a better handle.
It's not deregulation. It's
No.
It's making it actually
just
a workable
right-sizing it.
process. Yeah.
Right, we just need to right size it.
Yeah.
So, the same way that if you had the same level of regulation to lay the earliest fiber for the internet, we just would never have an internet.
Right.
So it's the same level of human impact. If we don't solve this regulation piece for the nuclear industry, we're just going to end up without an electric system that functions.
And then we're going to end up with, eventually we're going to have to burn some wood and coal. I mean, it's the simplest. I see it so clearly. There's also countries like France, which get almost all of their electricity from nuclear. So it obviously can be done. Shout out France. And then you throw in, I loved your point, you throw in then the Bitcoin miners to then balance that load, right? Be that buyer of last resort or curtailment party if needed, right? You've now got a perfectly clean, massive electricity generation with a grid that can support it, right? And a grid that can. So it's really interesting.
Exactly. We believe in tools of human flourishing. Nuclear power is one of those. Bitcoin is one of those, and human ingenuity and startups are the third.
Love that. All right, Harry, let's transition a little bit. Let's talk about Bitcoin Park. That was a great conversation. I think we're going to be replaying this for a while, I think, for people to understand how Bitcoin and energy markets combine. But let's talk about the park down in Nashville.
Love the park.
I do too. It's like I get goosebumps when I think about it. For our audience, tell us what the park is. What is Bitcoin Park?
So Bitcoin Park is at its most basic level just a members club, and the goal of the project is to create sort of grassroots education across the Bitcoin ecosystem. So what does that mean? It means we host Nashville BitDevs every month. Shout out to Steve Myers, who's the BDK maintainer.
Yep.
It means that we host an open house meetup. Just join our meetup page, bitcoinpark.com/meetup, and come and check it out, right?
Yep.
It's free. Come. We'll have
Hang out.
Every vendor who serves food at Bitcoin Park has to onboard to a Lightning payment system. You can only spend, you can spend cash with the vendors or credit, but
But they have to offer.
They
Lightning.
have to offer a Bitcoin payment option.
Yep.
That's a requirement. And then what we also do is some more kind of specialized summits and private events. So we just hosted the Lightning
Summit?
the Power of Lightning.
Power of Lightning.
POL.
So about every month or so, you
Every
guys
month
also have
has
like
a
a
theme.
conference. Yeah.
Right? So we've got BitDevs, open event, closed event.
Yep.
Every month. And we call it Bitcoin Week. It's the second week of each month, mostly. And that's the way to go for us. So in September we've got Grassroots Bitcoin, where we're gonna have all meetup organizers from all over the country.
I saw that one. That's fascinating.
So if you are a Bitcoin meetup organizer, reach out and we'd love to have you at that. And it's really just an opportunity to share best practices for running a meetup in your city.
Yeah.
So we actually have a GRIID employee who started the Knoxville Bitcoin meetup.
I don't know if people realize this or our audience, but there are Bitcoin meetups, regular ones, in almost every city in the country.
It's incredible.
Some of them, and whether they're organized around BitDevs, which is a Socratic seminar, technology focused, Bitcoin technology focused, which by the way is not like a thing. That's like an open source thing. It's not like it's not like BitDevs TM.
No.
So in some cases, like in San Francisco and New York, BitDevs have been running for years.
That's how I got into Bitcoin.
And they're great. Yeah. And Fidelity, when I was there, we used to host, give space up. We had this great auditorium that we would allow and help put on Boston BitDevs.
Yep.
That's just a thing people can do, right?
Yeah,
but there's also
BitDevs
even
is
more
the
generic.
format.
Yeah, that's the format. It's like sort of
It's
the
not a
most
company.
standard. But it does require like some very technical person, at least one technical person to lead it. But there are also just generic meetups, and these things are pretty well
The
attended.
Houston one's awesome. The Austin one's awesome. And I'm going to leave off of
These are ones you've been to, so I'm sure there's others too.
Kansas City's awesome. Minnesota at the Twin Cities is incredible. Shout out to Brandon Quittem, who runs that.
I've never been able to go to the one in where I live in North Carolina, but I've heard it's quite good
It's
as
really,
well.
really good as well.
Because I'm always here when they do it on like a Tuesday or Wednesday, and I'm usually in New York.
Yep.
But so anyway, I just wanted to interject with that. That's a real thing. You can literally go to meetup.com and search Bitcoin, and see like hundreds of recurring meetups. So that's something anyone that's on their Bitcoin journey, if you have questions, and you don't, you can't all, obviously there's tons of media resources now and whatnot, like podcasts like this one and
But
many
there's
others.
nothing like shaking hands
There's
with a
nothing.
Bitcoiner.
And becoming friends. It's actually a really big network. And then we're just talking about the States, let alone abroad. But let's go back to the park. You kind of told me what you guys do, but like, what is it?
So the park is this incredible unicorn of a property in Nashville that we are beyond fortunate to be able to make available to Bitcoiners globally. It's 2 buildings. One of them is a co-working space.
Connected, like basically, right?
Yeah, exactly. There's a small pathway in between them. So one is a co-working space. And then the other is an event space and podcast studio and kind of private offices.
Yeah.
And so the goal, and we're a little crazy, is we looked at what Silicon Valley did for technology, and we said, all right, well, let's read all the stories from the earliest days of Silicon Valley, right? It was the traitorous 8 who left. I think they left Sun Microsystems or founded Sun Microsystems. Right. So it's just these really small groups of people who just have a will to turn a place into a hub. And so we looked at Silicon Valley and we said, all right, well, we're going to build Sovereign Valley. And so we think Nashville is the beginning, and the greater Tennessee area, and elsewhere, regionally, is going to become Sovereign Valley, which is a focus on individual freedom tech, Bitcoin, and just these new types of businesses that are emerging, to be totally prosperous. So, what does it mean at the park? It means, maybe you want to buy beef directly from your rancher.
You're gonna
do it at the park.
Find someone there at the park.
We've got members there who are really tapped into those types of opportunities. You want to use the park as a privacy tool. We've got a member who had Starlink delivered.
I saw this. You guys were saying that you can have like your Bitcoin technology or whatever, Starlink delivered there.
It's a PO box.
Come pick it up. Yeah.
So you don't have to give your home address.
That's amazing.
You can pay with gift card or pay with Bitcoin.
Maybe I'll start doing that.
And
I'm a proud member of the park, and
thank you.
And I was there last week for that Lightning Summit, or the Power of Lightning conference. It was great. I was also there a couple months ago for the Bitcoin mining conference,
which we'll be doing again in January.
Very excited. And also, I should mention, so it is a magnificent property. And by the way, it's operated by great people, Harry being one of them.
Rod and Odell, shout out.
Yeah, Matt Odell, Rod, Rod BTC. I don't want to.
Rod Bitkite on Twitter at Bitkite.
Bitkite, and Josh, and so
Josh, dude.
So
He's
it's just a phenomenal location. It's actually it actually stuns the senses and mind when you first get there. Because when I heard originally that like some Bitcoin friends of mine were like buying a house in Nashville, man, right? I went to college in Nashville. I know the area pretty well. I'm like, I don't know, man. That like is it gonna be like a frat house? I mean, I lived in a frat house in Nashville at one point, and it wasn't nice, right? But it's magnificent. It is a magnificent space, and you guys are doing so many interesting events there. And then you start to realize that so we talked about the meetups, generic sort of meetups, but these hubs are now really emerging. So you've got like Pleb Lab and the Bitcoin Commons in Austin.
Yep.
You've got Bitcoin Park in Nashville. You've obviously just got like New York. There's a lot in New York.
Yeah.
But of course, PubKey as sort of a destination. You've got what Pete McCormack is building in Bedford, which is really amazing, by the way. If you start to,
I'm going next year.
I'm gonna go too. Let's
coordinate.
Let's do it. Okay. And because I mentioned this, too, Galaxy is a proud sponsor of the Real Bedford women's team, which they just started. So. And then you've got there's like a Bitcoin Commons like thing in Lisbon. I was told. You've got like El Salvador.
There's one in Miami, I think Bitcoin Grove.
Yeah. And you've got El Salvador,
the country,
right? Like, and it's really starting to like, there's starting to be like a worldwide tour you can do of only going to like, and again, we're not talking about like some dude's house. Like, these are actual places now, which makes a lot of sense because Bitcoin really is global and it is growing.
So I got this thesis from the founder of Starbucks originally, which is Starbucks was designed to be your third space. You've got your home, you've got your office, and you've got Starbucks. And so I'm incredibly bullish on this idea that all over the world there will be Bitcoin-focused third spaces.
And it's not crazy. I don't want to make this direct comparison, but you've got like the Lions Club, the Rotary Club. That's what those were.
Exactly.
For older generations, for prior generations, right? It's not crazy that like some people with like-minded interests would find a space to meet up, right? That's completely normal. That's what's
exactly.
And I think it is true. You know, it is. You know, you have like I've heard a similar joke about New York, right? That like the city is everyone's living room because like most people have like really small like apartments, and so like they just go outside, right? So it's like normal to see people, and New York actually is blessed with great public spaces, and so you want public spaces, but you know you can have private ones too, and there are a lot of them. It's really amazing, dude. I'm super excited about the park, and it's given me like a good reason to go to Nashville, by the way. Which is I also prefer it. I love Nashville. It's amazing. By the way, I didn't mention this too. So you got the park now fully up and running. I mean, really good. I mean, the lightning thing was packed. It's dope. And I'm gonna go to some more events, some of the specific events, but also I want to just hop over there. I mean, like I said, I went to college in Nashville, but Bitcoin conference is in Nashville next summer. No longer in Miami. They announced at the end of the conference this year in Miami. They did 3 years in a row in Miami. And now it's in Nashville. So you've got like a real, you guys are like hitting the wave on this really, really well.
Nothing wrong with a good tailwind.
Yeah.
We're okay with that.
What's going on with you? What are you thinking about? Anything else? Where can we follow you? Tell us, give us some closing thoughts here, Harry.
Yeah, I mean, I think, you know, my general perspective, I've been in the industry for longer than I ever thought I would be, I guess. Is just like, this is the best. I don't, you know, other people tell, you know, I'm like, I think of the counterfactual sometimes of like, you know, I could have been selling software this whole time, I guess.
Software is big business.
Big business. I'm just like, it's just not, it's empty.
Yeah.
Right? For me. So you know, Bitcoin has been more of a gift to me than I ever could have imagined. And I feel, you know, beyond fortunate. And so, you know, part of my thesis around wanting to work on the park is just like, I want to deliver A+ content to Bitcoiners, especially earlier in their journey, and provide a space. You know, most people are relatively insufferable on Twitter, but they're awesome in person.
It's true. It's true.
And so creating an opportunity to have like the serendipity that comes.
It's amazing. Honestly, the people I met at the park too. Like, and I was gonna say, like, I think Austin can be really great. There's great stuff in Austin in the Bitcoin world, but it's far if you're not in the middle of the country. It's far from the West Coast also. Nashville's quite close to the East Coast, so it's a great sort of quick destination. But I have met so many people, in general, by the way, another reason to go to meetups or go to the Bitcoin conference or go to Bitcoin Park. I've met so many people I only knew online. I mean, I just met people last week that I've never met in person, and it was amazing.
It's amazing. It just is
The
different.
community, like, this is what I tell sometimes, like, institutional investors. I was like, look, some, like, equities have, like, cults around them, no doubt, right? But, like, not many. Most investments do not have a large, committed, intelligent, and growing population of diehard builders. It's like when you own Bitcoin, like, you have to understand, like, even if, like, the speculators that come in periodically or whatever, that, like, if you cut that right off the top of the price is an example here, dude, you hit a hard cap wall that is only growing of ownership and long-term vision, and I see it, dude. It's growing and growing and growing. Like, it's crazy.
It's crazy.
It's a worldwide grassroots movement. It's not just certainly not just a commodity. It's certainly not just a technology. It is actually a movement.
We're going to win so hard.
Harry Sudock, Chief Strategy Officer at GRIID, partner at Bitcoin Park. My friend, thank you so much.
I needed another job like I needed the plague.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Harry Sudock, Chief Strategy Officer at GRIID and partner at Bitcoin Park, for that great conversation. Hey, check out bitcoinpark.co to learn more about the park and the events that are held there. It's a great time, and they've got a great lineup. Of course, also, thank you to our good friend, Bimnet Abibi from Galaxy Trading, as always. And guys, everyone have a great weekend, safe weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.